Good afternoon, traders. This is a live trade recap. I took 3 trades today right at the market open. I have everything on video. I'm going to show you what happened right now. The first trade that I took actually hit my profit target, went to 2R. It took a very long time, and I entered 2 trades while that trade was going on, and unfortunately those other 2 trades stopped me out. So this is the frustration and the difficulty of day trading. One of my rules says that if one of my trades goes to 2R, I can't take any more trades. And if that would have happened today, I would have ended the day with a 100% win rate. Instead, that first trade took a very long time to play out, and I was able to take 2 other entries that met my criteria. And unfortunately, they both stopped me out. And that's just the way day trading goes sometimes. There's nothing you can do about it as long as your plan says, okay, I need to take those trades. I have to take those trades. I'll show you everything that I'm talking about in just a moment. Let's start with just the mid-cap screener. I always like to show this to show you guys how I pick my stocks. So here's the mid-ish cap screener, I call it. Click on the 3 dots, click modify. That's the only way you know that your filters are going to be applied. And this screener actually kind of played a big role today. Usually the screener helps me, and more often than not, any tools that you come up with, if there's some kind of fundamental reasons and logic behind them, they're going to generally help your trading statistics, but occasionally they're going to hurt you. That's just the way things go, and that's kind of what happened today. It actually helped me in the first trade because American Airlines was the stock that I was took my first trade on, and that's the one that hit my profit target. And then something else popped up. It looks like it's already sold off enough to not show up here anymore, but SGOC, I believe, fell into this market cap criteria, this $1.5 billion in market capitalization. I guess now it's sold off so much that now it's back below that level. So that's kind of interesting, but I'll show you what I'm talking about in the video. So let's take a look at the video right now, get to the trades. So at the beginning of the session, I have American Airlines, TLRY. I had one other one up here, but it did not meet my daily chart criteria. I'll show you that right now. So it's KGC, and you can see here it's trading below the 200 MA line, and that is just an indication that it's in a long-term downward trend. So American Airlines, you can see here's the 200 MA line, that red line, and the price is trading above it. Same thing with TLRY, the price is trading above the 200 MA, so those can stay on the chart. The other one had to go, so I just put TLRY up there twice. And now on American Airlines, you can see I marked out the previous day or previous session high. So this one had a high in the pre-market that was higher than the previous day. So that becomes my kind of threshold that the price needs to break out over in order for me to look for an entry. So you can see that it's done that. Now the price is pulling back, and my strategy is to take the first 1-minute candle that makes a new high. So that's what's happening here. So you can see I'm hovering over this candle. The high is 21.18. So I want to see 21.19 or better. So watch this price bubble. Here's 21.17. We're looking for 21.19 or better. As soon as I see that, I trigger my hotkeys to get in. Watch this bubble. It's going to happen right there. It's 21.19. Let me shut off my phone. So you can see 21.19 was hit, and then I triggered my hotkeys. I got filled exactly where I wanted to. No slippage whatsoever. It's only one share, but it doesn't really matter. What matters is if there's volume and where the price is and all that kind of thing. So if you're trading a low volume stock, you're going to get slippage whether you're trading 1 share or 1,000 shares. So anyway, my stop loss is moved up to the low of the previous candle. That's all part of my strategy. And now I'm using my 2R calculator, which you can download for free from the Facebook trading group by the same name as my YouTube channel, Trading Armor. That gives me a profit target of 2 times my risk. And that way, in theory, that every single one of my winners will cancel out 2 losers. It doesn't always work out exactly that way, but that's the idea. It gets you very close to that in the long run. The last time I did test trading, I got to 30-something trades, I believe, before I decided to kind of restart the test with some different parameters, changing major parameters. And I think I ended up with like a 1.8 reward to risk ratio. So that's kind of how it works out in reality after you kind of get averages and slippage and all that other kind of stuff. So, all right, so let's move along. So again, once you're in the trade, the best thing to do is do not judge the trade. You could see how American Airlines was starting to go against me there. It was going down below my position. Sorry, I'm kind of fast forwarding and backing up in the video, but just trying to get to a place where you could see what I'm talking about. But yeah, again, here it is going against me again, but I don't worry about that. I don't judge the trade. I just set my profit target and my stop loss, and that's it. And that's the only reason why my plan and my strategy is successful so far. I have a 33% break-even rate. I'm somewhere like around 44% on all the actual trades, and even better if I just look at the trades that meet my plan as of right now. So I'm only profitable because of that discipline and because of not moving my profit target down and not trying to judge the trade once I'm in it. Just let it play out. Just stick to your plan. Okay, so here, now this is where things got a little bit weird today because I had at this point decided I'm only going to focus on American Airlines as far as my day trading. I have the SPY, the NASDAQ, and my swing trade up here just to keep an eye on things. But American Airlines was the only one that I was going to focus on because it had such high volume. I believe it still does. Again, if we look at the screener, 32 million shares. The only one that's beating it volume-wise is AMC, which was not up here at the open. It's just also moved into this market capitalization range because of its selling off. So that, you know, AAL was number one for a very long time this morning, and by a lot too. Like right now you have SPCE coming up on its heels volume-wise, but there was nothing else like really close to it at the open. So that was going to be my main focus, and then something else popped up on my screener I'm going to show you in just a moment. But again, look at American Airlines, the way it's kind of chopping out, you know, against me, coming down near my stop. I know when I was a newer trader, I would have freaked out at that and tried to figure out, you know, should I sell or move my stop up? What do I do? I don't do that anymore. I just stick to the plan because I know before when I used to do that, when I used to judge my trades, when I used to get worried, move my profit target down, move my stop loss up, in the long run, I always ended up red, no matter what. I would have green streaks. I would have a high win rate, 75, 80%, 85% win rate. I'd always be red in the P&L though, because your wins are tiny and your losses end up being large. So it does not work. The best thing to do is just stick to the plan. Okay, so SGOC, that was the one that popped up on my screener. Again, it was not originally in the market cap range that my screener is set to, but it fell into that range because people were buying shares. So it ended up popping up. I guess it's now out of the range again because it's selling off. But you'll see stuff kind of move in and out of the range of your market cap throughout the day. And that's what happened. And that's why I pulled it up. And then I marked out the previous day's high. And I said, okay, the only way I could take an entry is if it breaks out through that previous day high, because that's my strategy. That's my plan. And it usually works. It doesn't have to. And that's why I use stop losses. So here we go. So there's the breakout and the pullback. It pulled back on one candle. This is a pretty nice setup, you know, technically speaking. But again, the nice setups also fail. This is a perfect 3-bar play. Kind of, you know, one of the rules of the 3-bar play, at least as far as like Jared Wesley at Live Traders is concerned, is that it must be part of a shift or a new direction. And you could see that obviously this thing is kind of shifting back into an uptrend because it's breaking out through its previous day's resistance. So that's a pretty strong setup there. Again, even a super strong setup does not have to work. This is why when you are trading full position size, I strongly suggest that you take every single trade with the same position size, not meaning the same number of shares, but let's say like you put $100 toward every trade as an example, and then when the trades fail, then they won't wipe you out. If you think, oh man, this is the perfect setup, this is the ideal setup, instead of $100, I'm going to throw $500 at this trade, and when it fails, it's going to just eat up so much of your account. So it's just not worth it. So here we are doing our 1 share test trade, just like with all the others, regardless of how good this setup is. And then you're going to see what happens here in just a moment. I'll just let it play out in real time. I get stopped out, even though that's such a great setup. It doesn't matter. That's the 3-bar play failing, you know, right here on SGOC, which was a very hot traded stock today. So You know, you might see the perfect 3-bar play and it fails, so that's why you don't go all in on a trade or even raise your position size just because the setup looks so good. Now, this is what my strategy and plan says to do, and again, it does not always work out. There is no perfect strategy and plan. Once I get stopped out of a trade, as long as I have not taken 3 trades already that day, so that was number 2, and this will be number 3 coming up. My strategy and plan says that I must take the next entry, which is the next time a 1-minute candle makes a new high after a pullback. So here we have a red candle, so it's obviously pulled back. So now if this candle breaks out over that one, I have to enter. Yeah, it's a pretty risky entry, admittedly, and I was kind of watching it thinking, hoping, gee, I hope this doesn't trigger my next entry, because I didn't want to really take it because of how big this candle is. But again, the only reason my plan and my strategy is successful so far is because I just follow it. I don't think subjectively about the trades. I just get into them as they appear and as they meet my strategy and my criteria. So what happens here? Let me just show you that in real time. This thing pops back up over this candle. I mean, it's really kind of a double-edged sword, because you're thinking, wow, this candle's a pretty wide range candle. So if this thing pops out and triggers my entry, I'm going to be taking a decent amount of risk. But at the same time, if this candle breaks out above this previous one, that's a pretty strong move. I mean, this is a big red candle, and this is going to be an even bigger green candle. So again, if you're just looking at the technicals, if you're just trying to read the chart, that's a strong indication that buyers are present. So none of that really plays into my decision making. Again, I'm just trading my strategy and my plan. That's all. But I'm just kind of showing you, if you were reading just the candlestick patterns, just the chart, that would be a very difficult trade not to take, because look at how big that green candle is. It's another engulfing candle in front of a very large red candle. So that is a sign of real strength. And now, again, I move my stop up to the low of the previous candle, and that keeps my risk as low as possible. But this is still a pretty risky trade based on the size of this candle. You'll see here the percent risk based on the price of the stock. It's not based on my account. 6.54%. So that's a pretty high risk trade relative to my other trades. And then I move my profit target to the appropriate level. Again, American Airlines is playing out. I'm kind of avoiding talking about that one, but maybe we'll go back over that in just a second, because there's a lot going on right here with SGOC. But there is some other important stuff to go back over with American Airlines trade. So let's just fast forward, see what happens. Again, I know this is a risky trade that I'm into, risky based on the numbers. It meets my plan, my criteria perfectly, so it's well within my, plan to trade it. So it's not risky in that sense. But again, I just stick to my plan. I let it play out. I have my stop loss in place. I don't really worry about it. And then let's see what happens. It looks like it might reverse here. And then it stops me out. And that's fine. That's just the way it goes sometimes. You're not going to win them all. Doesn't matter how good the setup is. I kept the recording rolling a little bit long into me keeping my records by accident. But let's go back over that American Airlines trade just a little bit, since we were focusing on SGOC. That was the third trade. That trade failed, so I'm all done with trading because I can only take 3 trades. And if a trade goes to 2R, which American Airlines did during that, then I can no longer take a trade anyway. So those are just my rules. So here's a couple of technical things going on with American Airlines. So you can see that it made a new high over here, it pulled back, and then it made another new high here, but not that strong of one, just barely above the previous one. So again, if you're judging your trade, you might think, once you see this pullback, there's no way my profit target is going to get hit. I should just stop out of this thing, take whatever little profit I can, because I've already been in this trade a long time, since way back here, and it just doesn't look like it's going to work out. Again, I don't do that kind of thing. I used to when I was a new trader, but I just stick to my plan, stick to my strategy, and that's why this plan and strategy is profitable so far, according to my win rate. So we'll go over that at the very end, but watch what happens with American Airlines. It goes up, makes a new high, starts to pull back again. It goes all the way to 21.54, one penny shy of my profit target. Again, if you're a newer trader, you're probably going to pull your profit target down. You're not going to have the discipline to stick to your plan. and just let it hit your 2R profit target, which you really must do, because otherwise you're going to screw up your win rate is going to need to be even higher in order to be profitable. So with this 2R all or nothing trading, I only need a win rate of 33% to be break even. So there it goes. It hits my profit target. So the patience paid off. And then afterwards, it was a big sell off again. So, there was it's not like I left money on the table. And the funny thing that I've noticed is in the comments, I'll see people, oh, you should have moved your profit target down because it came so close. And I understand that. That's fine. And I appreciate those comments, and I like addressing them. And then this, not the same person, but the same type of commenter will on other videos tell me, well, you left money on the table because you only let it go to 2R and the thing went up to 3 or 4R. And so it's just kind of funny how that works out. So the best thing to do is, until you have a bunch of statistics to follow, just stick to one strategy, one plan, collect your statistics. If it's profitable, continue to trade that way. If you want to find out, hey, what happens if I wait till things go to 3R, just track it on your trade tracker. Don't start trading full position size on something you haven't tested yet. So that's the only point I wanted to make there. So let's take a look at the spreadsheet, and we'll look at the data, and we'll see why those SGOC trades were not really that bad of trades to take. They definitely weren't, because they were a part of my plan and my strategy, but statistically they were not bad trades to take as well, because of course, it crossed my mind, well, what if I would have just focused on American Airlines and ignored that SGOC when it popped up on my screener? I would have had a 100% win rate day. But instead, I got lured into SGOC because it popped up on my screener and it was making a huge move and all of that stuff. So let's take a look at what is going on with my second and third trade. So trade number 2, that's where I had SGOC, and trade number 3, that was SGOC today. So let's say, what if I just decided, you know what, I'm only going to take trade number 1, and that's it. Now this one I didn't calculate. Let me just do that really quick. Let's look at what's the win rate for trade number 1. So I have 1, 2, 3, 4, 5, 6, 7 winners out of 8, 9, 10, 11, 12, 13, 14, 15, 16 trades. So that's below 50% for sure. That's 43.75% win rate on trade number 1. So at least so far, if I only take trade number 1, my win rate is 43.75. My break even is 33%. Trade number 2 and trade number 3, I did already calculate. The win rate of those trades is 55% basically, and 67% on trade number 3. So even though today, yes, only taking one trade would have worked in my favor, it does not work in the long run. Trade number 2 and trade number 3 have a higher win rate, even including the 2 losses from today, and that's why I take 3 trades. It's not uncommon for your first trade to stop you out because of volatility or whatever's going on, and that's what's happening so far in this plan. We are quite shy of the 100 trades needed to meet kind of the requirement of the law of large numbers to see how this plan works out in the future. Things could flip around where trade number 1 starts to beat 2 and 3, but we won't know until we run this out, but it doesn't look like that's going to happen. So anyway, so that's my statistics. That's my trade tracker. We had a break-even day as far as win rate goes, but a red day as far as P&L goes. But I'm not really concerned with P&L because it doesn't mean much right now, because I'm not taking a full position size on each of these trades. So that's not going to make a lot of sense to you at this point, but don't worry about it. We're just tracking the win rate because I do know that if I stick to this all or nothing 2R trading, that a win rate of 33% is break even, and anything above that is profitable. So this is the stats. The average win rate of all these days is right here, 58.85. So far, all of these trades, with those fairly, relatively big losses on SOGC relative to the other test trades, we are now in the red on the test tracking, which again, the P&L doesn't really mean anything. This just tracks how much this test is costing me. And it's cost me 11 cents so far to take 38 trades. So, how red are you after your last 38 trades? Hopefully not. I mean, I hope you're green, but I know that in the beginning, probably after my first 38 trades, I was much more red than 11 cents and not really getting any valuable data out of it. So I hope you get the point that I'm trying to make there. And I've been green P&L wise during most of this test trading, and I probably will come back in the green again before it's over. But again, the win rate is the main thing we're focusing on here, because that's the one thing we know holds true, that 33% is break even. Anything above that is profitable. All I really need to be profitable in this strategy is to win 4 out of 10 trades. That's it. So the win rate of the actual trades, I've won 17 out of 38 trades, is 44.74%. So again, 33% is break even. Win rate without errors, again, that's to remove a few trades that I took that either did not match my plan and I entered them by mistake, or there was some other issue, or I've changed the plan since then, that kind of a thing. So this number represents like if I would be trading perfectly according to the plan. So this is a reflection of the plan itself without inputting human error into it. So it's not very realistic, but it shows you that the plan at least works. And then the average of those two numbers is probably more realistic of what your long-term win rate might be, because you're going to get better at trading that plan. And then this is the win rate after just the first 3 trades, including error trades. But this is only the first 3 trades, so 51.52%. And that's one of the reasons why after the first week or so I decided to stop taking more than 3 trades, is because I noticed that after my first 3 trades, the trades were all losing. And that's not really definitive. You know, the only way we know if that would continue is if I continue to do so. But since it was putting this test kind of on the edge of being profitable, I decided to remove it. So that's that. And then of course we already talked about the win rate of just the second trade alone, the win rate of just the third trade alone. I'll put one up here for the first trade, but I told you that was 44% basically. So hopefully this video was helpful to you. I know there's a lot of information here, but guess what? Day trading is pretty complicated stuff, and if you just go out there and you just try random things and you just track your P&L, whether you're red and green, you really don't know if what you're doing is working, and you certainly don't know if it's going to work in the long run, which is really all that matters with day trading. So let me know if you have any questions, and hit the like button if this was helpful to you. If you haven't done so already, please subscribe to the channel. It really helps me out. As always, go into every single trade with a plan. Stick to that plan no matter what. You should be tracking your trades, otherwise you're not going to know if your plan really works. Take your stop losses, honor your profit target, and in the long run, you should be green. Take care.